The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 12th day of January. My pleasure to be here Monday through Friday, market days. And of course, this is a very special day for us here in New England because the Patriots won. A game that I actually watched. It's very unusual. I don't usually sit there spending the time to watch full games. Maybe I watch it a little bit once in a while, but I did watch the game, and I have to say that it was, besides being a very educational game for me, I felt I actually understood just exactly what the importance of a quarterback is. There aren't many sports that I can think of where the game pivots so much on one player. You might have an important player, but all the players are very important. In this case, yep, all the players are important, but the tide, the trend and the tide basically are being foretold by the accuracy and the selectivity of the quarterback. It's a fascinating, and it was beautifully done. So, well, let's get on to the market. So I was expecting, I was quite shocked actually last night when over the weekend I spent a lot of time on charts and stuff, and I spent quite a bit of time for my subscribers, giving them my overview on what we're looking at and why and what the parameters are. And I did make quite a bit of a deal out of saying that in the Dow, certain support levels have to hold. But I am anticipating somehow, some way, that we will make higher highs in January before going down very much deeper. Who's to say? But the Dow was down 160 or more points. It's only down 49 points now. S&P was down much more. It's down 10. Let me run the numbers, and I'll show you as we're looking at this E-mini chart. You see this H pattern here? This is the daily chart of the E-mini, March E-mini. In a sense, that is a very unusual. I spent some time with one of our callers the other day talking about the unusualness of some of these chart patterns. I have seen them, not that often, and the conclusion I have come to, so even now with the sharp intraday pullback, is that I'm still looking for almost like a head and shoulders pattern, except that in this rally, there'll be what I call an inside buy mode. We've gone to a peak C in the daily chart of the E-mini at 2088.75, pulled back very sharply down to the 1984.25 level, bounced up to Friday's spike high of 2062, round number high, pulled back this morning to 2015.25, and now we're back to the 226 area. There's a chance that we're going to make some kind of what I call an inside buy mode that takes you to a new, slightly higher recovery high. Looking at the 120-minute chart, I had drawn a cup formation here, thinking that if we were to break out, if we could break above the 2051 E-mini resistance into the 2053 area, that would suggest, yes, we now have a chance by, when would that date be? That would be by the 13th, by tomorrow. We could see a retest of the 260.62 high. Instead, we went exactly the opposite way as what? That 200-period exponential moving average, that kind of pinky line right there, that is a 200-period moving average. Look how it was resistance, support, resistance, and we're going to see if we can become at least an inflection point and a target point over the coming 2 days. That's today, tomorrow, maybe even to Wednesday morning. 2034 is going to be really important on a very short-term basis to try to get through. We'll see if it's able to do that. So now let's just run the numbers. What I'm going to do is take this away here. All right, move that over there, and let's run the numbers. You've got the Dow down 46. Very interesting pattern here, a narrowing wedge. You've got the Chapman wave, falling axe formation, lower highs and much lower lows. That trend line resistance is now a little lower down. Let's call it 17,890s. Dow has to break 17,890s. It really doesn't. It has to start trading in the 17,998 to 18,010 area to really break that trend line and do it determinantly. That's number one. Number two is in the arch formation. Is there going to be another arch formation? If by the end of the day we start to break under 17,600, very poor action. That'll suggest quite strongly that 17,571 low of today will be taken out, and that trend line we're looking at right there is going to be very important, round about the 17,540s. I see rotational strength and enough strength to try to push the markets selectively higher. That means some will fail and some will make it. And I think the Dow is one of those that will make it towards all-time highs. Weekly chart, well, we've just started the new week. Needs a lot of work. It closed just above the 9 EMA on Friday, and that was good. Let's go on. S&P, SPX.X, that is a slightly different pattern. The weekly chart really suggests that there's absolutely nothing wrong here. This is just normal formation, bouncing in and out from that 9-period moving average, 2044 repellent propellant line. Let me just have a sip. Not sure why. Got the old frog in the throat. So 1820 was the low, and now we've got to see something. That was the October low. And then you keep making rising lows. And now the most important low that we would look at is 2016 will be the key support. So by the end of the day, what we really want to see is that the S&P cash is closer to the 2042 area rather than 2030. That'll be very important, at least the start of the week. Preferably it comes back from the losses and makes a bit of a gain. So why the E-minis were up over 15 points earlier this morning, it was a little mystery to me, because it all over anticipated what I was expecting over a period of a couple of days. So we'll be looking at this very closely. Now, the VIX index, I'm sticking it in right here because it's so important. The volatility index is 19.18, back in the 19s. Up $1.67, up 9.52, out of all proportion to what we're seeing. Something's going on. My contention is that there is such a high distrust of rallies that what we're looking at is a situation where the speed with which nervousness is coming in, not really based, oh, it was a mistake, did not mean to do that. Where did I put that? Oh, I don't know where it went. Okay. The speed with which fear is creeping in, or selling pressure is creeping in, is telling me, on the one hand, I've got to be a little bit careful. I've got to respect price. Price is the arbiter of a trend. So if price is moving higher, I've just got to respect it. I can't call it an aberration or anything like that. It's a little unusual. We are now only 600 points from the all-time high, while why the VIX has gone from the 10s and then the 11s as lows, and then the 14 area, to now making the 16s a support, a rising trend, says to me, be respectful. And that's why we don't have many positions in my opening call. We have one position which is actually holding, oh, it's up very nicely today. Nice, thank you. And another longer term position that's also doing okay, very nicely. In fact, what is it doing today? It's down a little bit. So we're not heavy at all. We're actually mostly in cash. I'm looking at positions. I'd like to get into some positions, both long and short. I'm looking at a whole new sector that's going to give very inviting signals if it continues to act as well as it's been acting, and that's going to be very important. So let's go on. You got the QQQ series. QQQ series trading at 101.92, down 70 cents. Not good action. Why? Because it involves Amazon's down $4 at at 292. You got Google, which is down $4 at 492. Wait, Amazon was down $4 at 291. Okay, and now we've got Priceline. Oh, these are heavies. I mean, these are big guys here. Look at this, down 24 at 1,027. Rotational market, a very important one. Let's look at GE. GE. Oh, nice. First sign of a turnaround in GE in a long time, and in a leg F to the downside. Well, a leg F/B to the downside in the daily. Weekly trying to test the left side low. This is going to be really important moment for General Electric. It's not really a bellwether anymore. On a short-term basis, it's been absolutely correct in telling us to watch out because the downside is still an open hole. There's very little support because GE is showing that. When you go to IBM, my Dow Quartet, IBM is also down $1.80 at 157. Triple M is down 45 at 161. And UTX, my intermediate term pilot light stock, is acting quite well. It's down 10 cents, 130.92. Now let's go back to our story. You've got gold. Now, that's going to be very important. Why? Because gold is up $10, up at 1226.30 right now, acting very well. First time it's trying to tackle leg B, peak B, that is, at 1239. This is a continuous contract made in the week of the 12th of December. I like this action. I'm very impressed with the way gold has been acting over the last week or so, but I'm more impressed the way some of the stocks are showing that they want a leadership role here in looking at the overall market. Silver at this particular point is up 0.07 at 16.49. Monthly chart struggling very hard, but I must tell you that the weekly chart is starting to improve a lot. In fact, in a sense, looks a little bit better than gold. Platinum, I was impressed with when I did some work on it last night. Peak leg D right now, nice U-turn, but a very slow move in the weekly chart. And it's telling me that the metals, based on the fact that the dollar is so close to some kind of a top here. Nice action intraday. It's up 18 cents at 92.11. I've got an alternate count here, but my UUP count says, watch this one. I'm calling it, at least for now, a peak F. I'm not sure if it's going to be a peak F if there's another new high, because I'll have to call it an alternate count. But just at this particular point, the MACD is good. The stochastics at 93%. So I don't think we're just going to roll over suddenly in the dollar, because the euro is working very hard to find some kind of support, and the technicals are saying it's going to take either a little bit more sideways action and then a powerful spike to the upside to get the stochastic and MACD to respond positively with the price, and then to break over the $1.19 in the euro-dollar currency pair resistance. And let me see, while we've got a little time here, just before we go off for the break, the TLT is acting well, but it's starting to also show signs that it's getting a little bit tight. I'm going to be watching this real closely. I'll be back. Basil Chapman, 877-927-6648. Dow's down 53, S&P's down 11. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I was asked about earlier during my before my show, I was asked about Twitter. I actually had it on my list this morning as a potential long. No, I didn't put it in my service because it was just the back of my mind saying, hey, is this the time to be looking at it? Because it acted so well recently. Right now, it's down 6 cents at 40.10 TWTR, trading at 40.15. Whoa, it's moving very quickly here. And the 120-minute chart has just made a long-legged doji and D in a gentle up channel. It's amazing how many times you can get your PT. Look, A, B, C, D, pulls back, A, B, C, D, pulls back, and then very quick, A, B, C, D. Will it pull back this time? I'm looking at this and I'm thinking that what it's trying to say to me very clearly is that finally we've got higher highs and higher lows. That's very important, number one. Number two is there are so few NASDAQ stocks that were leadership stocks that in fact are holding well enough to be considered leaders, that you now have to look at the way some are coming off. For instance, another stock that I thought, for a 6 to 8 point move to the upside, a potential, let's have a look at Apple. So I spent some time very early this morning looking at Apple. This bar was not there at that particular time. And I thought to myself, well, here's the support at that black line, which is the 9-period exponential moving average at at about 110.35. So I said, you know what? I'm going to give some of these stocks the entire day. I'm not going to do anything with them. Just look at them for the day, see how they close the session out, and then see if Apple has a chance for one more cup formation to rally above 114.77. That was the high of the week of the 2nd of January. And if it's able to do that, you can get the cup formation with a retest of the 119.75 all-time high, and that'll make leg D maybe even an E in the Apple monthly chart. But it's not worth doing anything today. Why? Because so close at 113, I'm waiting here for the 114 to 115 area to see whether or not it's a short or a long. Why take a position? Why not just hold off? So let's go back to Twitter, since I'm putting them in the same categories, because they have somewhat the same chart formations, especially in the weekly. You see, here's the Twitter's weekly pattern making it much larger, but it's still the potential for a U-shaped pattern. However, in the price movement, now let me open it up. In the price movement of the daily, what I love to see is when there's a very sharp gap down. I did some work on this over the weekend. Of course, I didn't write it all down, so it's all wasted work because I did the work. It's in my mind perfectly. I can see the chart plans and everything, but I forgot to write down all the names of the stocks that I was looking at. I'll find them at some point. But you see this gap in Twitter right there, bad news on the 28th of October, and the day before it closes at 48.56, and kaplop, the next day it's down at 41.76, and then it continues low. It hasn't been able to even break that high bar of 44.58. Not once since we've been down that day back in October. So all of a sudden you've got a U-shaped pattern, and it's really a bowl formation. What's the difference between a cup and a bowl? It's exactly that. A cup is deeper, shorter, and a bowl is flatter and wider. And in this particular instance, what happens when a price breaks out of a bowl formation, if you look at the very long-term chart of gold back from 2000 into its breakout on the right side 4 years later, 3-4 years later, that bull formation was amazing. And sometimes I like to do this. I do this with my hand. I can't do it with my hand on the TV screen. But I take that distance, I go to the bottom, and I do it vertically. And sometimes you can make like an arc using the old-fashioned compass. Put the point there and the pencil there, and you draw an arc, and it can take you to the highs. That can work sometimes. However, this is leg E in the daily chart of Twitter. So I decided I'm going to wait. So Twitter acting very well off the lows, but the weekly chart is not that great. It's in leg B, and the monthly chart says, wow, a lot of work to get back to 74 level. So I'm just going to stay. I think the support is at 38.45 to 38. That would be a nice place to start looking at it to see if it's worth a nibble on the long side. And on the short side, I don't know if I'd even bother with shorting it right now. I see too much support in the 38s. So I'm doing nothing right now, but I will just tell you this, that if Twitter goes above 41.50 in the next 2 days, that'll be a great sign to say, hey, I'm now going to go for the 43.24 200-period exponential moving average of the weekly chart. First time it's been able to say that. Let's go to our first caller. We've got Mike in Kansas City. Kansas City. Hi, Mike. How are you?
I'm well, Basil. How are you?
I'm well, thank you.
Oh, it sounds like we got the music.
Oh, we got it. Oh, that's okay. What you'd like to look at?
CDW.
Is that the shoe company? No.
No, it's a technology reseller out of Chicago.
Okay, CDW. We'll be back with Mike in Kansas City. And you skipped callers and you went too close to the break. Oh, I missed Garrow. Oh, I'm so sorry. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Mike. And we're looking at CDW Core. It's trading at 35.69, down 2 cents. I had done work on this. I got a feeling that it came from IBD. It's Investor Business Daily at some point, so I did some work on it. But I'm so pleased you brought this up, because this is exactly what I'm looking at. There are a number of stocks that are forming this kind of, it's let's call it an up channel, just to make it as simple as possible. It's an up channel, but within the up channel, it's doing a ton of work with support and resistance levels, and it's just kind of stuck there. It hasn't broken out to the upside, it hasn't broken to the downside, and at the same time, it's giving certain signals that suggest it just needs a release of pressure to be able to spike a little higher, because the downside support has come in so strongly. And this is exactly one of those. The weekly chart, peak E, holding beautifully above the 9-period moving average of 34.70. The MACD is good. The stochastics at 90%, 92%. It's an IPO in leg C in the monthly chart. The daily has gotten to this bumpy up channel I mean, you could almost have used it in the typical Chapman wave. The methodology was developed because my thinking was, as I noticed this years ago, and I started to draw in the lines, that when the price of whatever you're following, that whatever tradable it is, when it gets to the upper level, it'll be repelled and come back down. And when it gets to the lower level, it gets propelled and bounces back up. And it just continues doing this until eventually, of course, it'll break decisively one of the ways. And my looking at it right now says there's a better chance that if this is leg B, I don't know what the previous peak is, F/A. Doesn't matter because you've already made an A and you made a B. It's holding so well down 2 cents on a day like this. This is one of those stocks. Now, let me ask you, do you have a position?
Yeah, long.
Now, is this a position you've had for a while, or is it just one
Yeah,
you've just...
it's a long-term position.
Now, if you've got a long-term position in a stock that's acting so well in this environment, I don't even want to get involved in saying to you, put a stop here and take a little off there. I think you have nailed the trend of this particular issue. It's acting well. There is, if I was not even looking at the stock market and I was looking at this chart, I'd say, Mike, you have picked a short-term, whippy, but rising highs and rising lows stock that is in a buy mode. And until it breaks down decisively 2 points lower than where it is right now, I wouldn't even want you to touch. I'd even think that it's the kind of stock you might even want to add to. So I like it. What you're thinking is that you've got this as a position. Yeah, this is not a quick trade or anything. You'd like it to be a position that you can hold until maybe the monthly gets into leg D or something like that. Is that your thinking?
Yeah, correct. I mean, I'm definitely going looking at the monthly or the weekly first. I'm really not that concerned with the daily, and you can obviously look at the monthly. When I picked it, right, when I picked it up immediately, the monthly and the weekly is what I started notating. Didn't realize that I'd already done the daily until I opened it up. Now what I'm looking at is under the conditions of the last 6 sessions in the market, this thing is higher and it's doing very well. So here's my thinking in terms of the longer term. At some point in the next week or two, I suspect it will go above 36.08 for leg D in the weekly chart. The MACD is still very good. The stochastic is at 92%. So what it says to me that any consolidation could take it down. We're talking longer term. 32.45 is the monthly 9-period exponential moving average. 34.71 is the weekly. So at this particular point, the higher it goes, the better it's going to increase those moving average support levels. So I don't even want to do anything. It looks like a terrific stock right now. Needs to break out. It needs to break out and then take out the up channel resistance lines. You want to see this trading happily in the 36.40 or higher area, and if it does that, then all of a sudden it's kind of broken free and you've raised the base, at least on the position that I would call maybe a half position that has a rising trading stop, that you just keep it a mental stop. I wouldn't even put it in, but that would help it a lot. I like it. I think you got a very nice pick here, CDW. I must write that down, CDW. Thanks, Basil. Sit on my hands. I get it.
Sometimes sitting in your hands is just the very best thing. You look back and you say, wow, I could have been out of the stock and look how nicely it's done. Or sometimes, of course, it saves you the other way. But, yep, I think sit on your hands. Hey, nice expression. Thank you for calling, Mike. Let's go to Gara. I'm sorry, Gara, I overlooked you in the very beginning. You were the first caller, but I didn't take you first. Gara, how are you?
I'm very good. No problem. Don't worry about it. Thank you, sir. Thanks so much. Actually, when I called you, you were just explaining regarding Apple, and at the moment, it was a coincidence. And I was going to ask you what you're feeling about the Apple, and you were explaining the situation. I have a feeling, Mr. Basil, that this is not ready to go up yet, because what I see from the chart is that this is going to come down gradually and hit 104, and it's going to hover there for a month until mid-February, until the 200-day exponential catches with one of the candles. And from there, it's going to shoot up like a rocket. What is your idea? Yes or no?
Okay, so now let's do this, because now what I can see based on today's action was really important. Even it doesn't matter where it closes. I want you to see the parameters that it covered today. So if that's the case, what I'm looking at here is Apple on the daily chart has gone to a peak D at 119.75. It comes down very sharply in a bumpy way, but sharply, and it comes down to 106.26 and then rallies peak A, B. That's where you've got to be careful, because that's where the chart can roll over and make the pattern that I call the H, lowercase h pattern. Does that? It actually takes out that left side low of 106.26. It goes to 104.63. Then it has a very quick bounce and it goes to peak A and then it pulls back. Now what I'm looking at, this is the same as the GLD chart, the monthly chart that we saw a year and a half ago. I was discussing how negative it was, and what I'm looking at here is that arch formation in the daily, because of today's action, says there's a good chance that if Apple rallies, the 113, maybe it does take out 114.77, but the 114s is the area that's going to be the absolute biggest test now on the upside for the potential for Apple to rally more. Now, all the news is out. There must be something else that's going to have to happen in Apple for Apple to have the Christmas kind of explosive action that it never had. I don't know why it would even get it in January. So that's why we were talking about this the other day. And when I was looking at it last night and this morning, I was saying, hey, this is a fascinating chart, because the MACD and stochastic were acting, up until this morning, were acting quite well. The price did respond, but it didn't take out that left side high of the 29th. So I think you're right. Now, if you're right in your assessment, that would correspond to what I'm looking at in the market. A bumpy ride, somehow, one way or the other. The Dow and the S&P managed to squeak to new recovery highs. Then we get a much deeper correction, and then we get an explosive move to the upside, and that move will include Apple.
Yes, that's my estimate. That's how I look at it, and it did happen about 2 months ago. It did the same thing. Of course, you don't use that sharp parabolic dots, but the way that I look at it, it's going to come and hit the sharp parabolic bar dots lower, and it's going to go to 104, 104, 105, 104, 105, 104. And this is going to continue for 1 month until the 200-day at the 6-month chart, until that 200-day will come and catch with one of the candles.
Well, see, yep.
This is my idea. But anyways, it was very nice talking to you, sir. And hopefully, I will call next in the future, and we go over this Apple again. Thank you, sir.
Okay, very good. I think your eye is correct. I think, and the only thing I would say to you is, if it breaks 115 to 116 resistance, it could go a little bit higher. Yes.
Yes, absolutely right. But I think it will go to 114, and it will stop there and start to roll down.
And then 103 is the 9-period exponential moving average support in the monthly chart. And if Apple just goes sideways in a consolidation, that would say that on the next move up, fund managers are going to say, hey, we cannot not have Apple in our portfolio. Let's increase our positions. But let's see what happens.
Yes. Thank you, sir. Thank you.
Thank you very much for calling. Always appreciate Gara. So now let's do this, folks. What I wanted to do is, just before the next break, which will give me a chance during the break to do some other things, I wanted to show you high-grade copper. Look, high-grade copper is just, it's ruthless. It's brutal. Look at the way it just gets hammered. This is what's been happening in many of the commodities. The only commodity that's been showing internal strength so far has been gold, because it is has a little bit of the fear factor, currency of fear. So that's been the participant there. But now look at this. There's the high-grade copper monthly chart. There are those H's that turn into lowercase m's, and they keep breaking to lower lows. The 2.5947 area on the continuous contract is the 200-period moving average. I see no reason why I can't expect it's going to get there. And there isn't any support on the left side except for the trough of the candle of July of 2009 at 2.42. So that's looking at the at high-grade copper. So it means that the weekly, a great deal of responsibility now is being placed on two aspects. One is, let me just move this over. One is, I wonder if I can do this on this chart here. No, that's not the chart I want. I'm going to get rid of this. I want to show you something here. Close the workspace. Go to this workspace over here. This is a technique that I developed a long time ago. And let's see if I can get some parameters here. I love looking at John Logan's work where he's got all those different levels, because this is kind of the chart you're looking at right now. Let's go to HG, high-grade copper. We'll show you 273 to 274 is going to be really important, was really important support for high-grade copper, the 120-minute chart. It went lower. It went down to... look at all the number of 273s there. It went to 270, exactly. So this is going to be very, very important. That's on the 120-minute chart. I don't have anything in the weekly. I do have 270 in the weekly. In the daily, I don't have anything. I do in the weekly at 270. So I'm going to be watching this real closely. And then I've got 256 in the monthly as key support trend, not trend lines. These are built-in support levels based on other techniques within my tools that I use. Now look at this. So that's high-grade copper. But now what's even more fascinating, was it platinum? I don't remember now. Yeah, platinum. Look at that congestion area there for platinum. And 1249.37 is the resistance, and it's at 1234 right now. So it's saying the support in platinum is very, very strong. There is resistance, but it's not. It's at 1247.07 for the daily, and 1238.56 is the one just below that over there. So we're getting into a little bit period of area of resistance, but it's the way the support comes in that's so impressive. A break underneath those support levels would be very, very negative. If you're looking at, let me go to gold here. See now what gold did, it held all that, and it's at 1226.40 right now, and there's a 1228.83 level, and that 1228 happens to coincide when I'm looking at the daily chart to what? To us being at leg B in the pattern that I call the the arch, lowercase h, that goes to a lowercase m pattern. And that says very clearly that if 1.239 is 1,239 is taken out on gold, then all of a sudden 1248, the 200-period exponential moving average, becomes the magnet line to watch. So I'm looking at this and I'm saying, God, this is the most fascinating period we've had. We've got bonds holding very well. Bonds are up 12-30 seconds. They're holding the 9-period exponential moving average. It's gone to a leg E/B in the daily with enough evidence to say that it's probably, with just a little bit more to go, going to take out the high of 149 8/30 seconds in the contract itself. Let me tell you what that is in real terms. That would be the high that was made right there of E/B. At 149 8/30 seconds. Okay, same thing. So at 149 and 9/30 seconds, I have to call that leg C. And it says bonds would go a little higher. Well, isn't that interesting? Why? Because the dollar, TXY, the dollar has almost the same pattern here. It's just under like a high-level consolidation stochastic at 88, but turning down. The MACD is still very good, flattening out, but still very good, saying there's enough strength here to have a couple of sneaks to the upside. And that's the reason why when I'm trying to put the whole thing together, and I'm saying, wait a minute, when you're looking at the markets, why on earth are you expecting higher highs? That's because when I do, if this work functions in a daily chart, then surely the same work should function in a monthly chart when the MACD is turning down but still very good in the weekly chart. And the weekly is 80%. I'll be right back.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. So let me just quickly sum it up. If copper is still going down, although I see that it's getting real close to some kind of support, and the dollar has still got a little bit more to go, and then I think it takes a digestive moment as the euro, which is attempting to rally, it's going to take a little while. Unless it's a V-shaped turnaround, I think it's more a bounce along the bottom, making an arch formation that becomes an H and then an M. We're going to look and say what sectors. Look, Pfizer and Merck are doing very well. If Merck breaks, it's in leg B in the daily, leg C in the weekly. If Merck it looks like it's got a target of the 64 to 65 area over the coming weeks. It's acting very, very well. All-time high was 91.50 is the left side price time match that says, hey, by March, April, it could be quite a lot higher. So far, so good. Let's see what happens there. But what I don't like, and this is going to be really important, is that as I'm putting the pieces of the puzzle together, this market trying to go back to minus 40 a moment ago in the Dow. The S&P was playing catch up because it's got a much bigger percentage decline at this point than the Dow. And now the Dow is at minus 94. And that's the reason why I say we're going to have very tight stops in here. We're going to be very selective. We've got a lot of cash. I like that position right now. Why? It's telling me which stocks are going to be the stocks that I want to start putting on shorts and heavy shorts. Which stocks are the ones I want to actually start putting on put positions, something I haven't done. We did it just the other day. We had a minor success in that it took a little bit of a loss on a chunk and then a huge 70% gain on the rest. So I'm getting a good feel to go back into options. We do that in my newsletter periodically, not very often, but we do it. So I'm looking at this and I'm saying, hey, wait a minute. There are a lot of options open, options, not just options, calls and puts. I'm talking about options, choices. In the market right now, I don't have to be rushing into anything. Even if I'm talking about modest new highs, it says it's a very selective move. I want to be in that selective move. Oh, and by the way, folks, here in Boston, starting Thursday, the New England Auto Show is going to start. It's going all the way through the long weekend. And believe me, this is going to be, for the American automobile industry, it is one of the most important. It's going to show off American cars like they haven't been shown off since the 1950s. In quality, in the late 60s, there were these big cars, but there was more glitz and glamour than anything else. So this is going to be one of the most important. Quality is improving. It's not there. It makes me mad. I want to scream and yell at the unions and the bosses of these companies. There's no excuse for workmanship being not. It should be absolute top quality. It can be done in mass production. It's been done by the Japanese companies, and you can do it with the American automobile companies. So hopefully we're getting there. But design-wise and in every other way, it's going to be an amazing, amazing show. I'm looking forward to hearing your opinions on it here in the Boston area, downtown, the World Trade Center, I think it is. Yeah, look for it. It's going to be great. Now, let's just go back to the markets. So I'm going to just make this real clear. The VIX index, as long as the VIX index is running, if it starts to get into the 20s and holds, that's going to put a lot of selling pressure on the market. I'm thinking that it's in a choppy phase now for some other reasons that we're not quite aware of right now. I'm not going to fight that. So in the meantime, let's give that. So the VIX is in the 20s. Be very careful. Pulling back under 18 again says, we're going to wiggle our way towards a new recovery high. As far as the Dow is concerned, INDU, just keep in mind that a break of this trend line right here, a close below 17,480 says watch out, because under 17,200s, we're in a different trend altogether. So I'm watching this very closely. I suspect one way or the other, we're going to try to close better than where we are right now and wiggle our way towards a higher high than we made on Thursday at 17,916. That's my thinking. We'll see if that works out. Hey, stay tuned for Larry Pesavento. It should be a great show with Larry and great shows at TFNN. I'll be back tomorrow. Have a great rest of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.